There's a vault in Manhattan that sits 5 stories underground, built on the bedrock of the island itself. It holds more gold than any other place on Earth. 6,000 tons of it, worth something close to $500 billion depending on the day. Here's the strange part. Most of it doesn't belong to the United States. It belongs to other countries, dozens of them. And they keep it there because somewhere along the way, we all quietly agreed that if everything else collapses, this metal, this specific element on the periodic table, is what we'll fall back on. But no one remembers making that agreement. And if you ask why gold and not silver or platinum or literally anything else that's hard to fake and limited in supply, the answer gets uncomfortable fast. Because gold isn't money anymore, it hasn't been for decades. But it still acts like the shadow version of money. The plan B that sits in the basement while the real economy happens upstairs. And right now, in 2025, central banks are buying more of it than they have in over half a century. So either they know something we don't, or they're all making the same irrational bet at the same time. Let's figure out which one it is. To understand why gold matters now, you have to go back to when it stopped mattering. August 15th, 1971. Richard Nixon walks into the Oval Office on a Sunday night and tells the world that the United States will no longer exchange dollars for gold. Just like that. No warning, no vote. The entire global financial system had been built on the promise that $35 could always be traded for 1 ounce of gold, and Nixon just ended it. He called it temporary. It's been temporary for 54 years. What Nixon didn't say on camera was that the U.S. was running out of gold. Other countries, France especially, had started showing up with bags of dollars asking for the metal back, and the math wasn't working anymore. America had printed more dollars than it had gold to cover. So Nixon did what anyone does when they can't pay their debts. He changed the rules. Overnight, money stopped being backed by anything physical. It became what economists call fiat currency, which is just a fancy word for it's worth something because the government says so. And everyone panicked for about 6 months. Then they got used to it, because it turned out you didn't need gold to back money. You just needed people to believe in the money. And as long as the U.S. economy kept growing and the military kept enforcing global trade routes, belief was enough. But here's the thing about belief. It's not a law of physics, it's a consensus. And consensuses can crack. Gold is older than every empire that ever used it. Humans have been obsessed with it for at least 6,000 years. The Egyptians buried their kings in it. The Romans paid their soldiers with it. The Spanish murdered their way across 2 continents looking for it. And the reason is almost embarrassingly simple. Gold doesn't rust, it doesn't decay, it doesn't corrode or tarnish or break down. You can bury it in the ground for 1,000 years, dig it up, and it looks exactly the same. That's it, that's the magic. It's also rare enough to be valuable, but common enough to actually use. There's about 200,000 tons of it that's ever been mined in all of human history. If you melted all of it down, it would fit inside a cube 68 feet on each side. That's all the gold in the world. Every wedding ring, every Olympic medal, every circuit board, every bar sitting in a vault in Manhattan or London or Zurich. 1 cube, you could park it in a Walmart parking lot. And because it's so rare and so indestructible, it became the thing people reached for when everything else failed, when kingdoms collapsed, when currencies imploded, when wars ended and new borders were drawn. Gold was the reset button. But after 1971, it wasn't supposed to be anymore. The global economy had evolved past it. We had computers now. We had derivatives and bonds and central banks that could print money at will to stabilize markets. We didn't need a shiny rock to tell us what a dollar was worth. Except central banks kept holding on to it anyway. They never sold it all off. They just stopped talking about it as much. And that should have been a clue. Here's what most people don't realize. When a central bank buys gold, it's not an investment. It's insurance. They're not trying to make money off it. They're preparing for a scenario where money itself stops working. And in the last 3 years, central banks have been buying gold faster than at any point since 1950. China bought 225 tons in 2023 alone. Poland bought, India bought, Turkey bought. Even countries that can barely afford it have been stacking gold like it's going out of style. Why? Because they're watching the same thing you are. The U.S. national debt just passed $36 trillion. That number is so big, it doesn't even mean anything anymore. It's abstract. But here's what's not abstract. The interest payments on that debt now cost more than the entire defense budget. Every year, the U.S. has to borrow more money just to pay the interest on the money it already borrowed. That's not a sustainable system. That's a Ponzi scheme with aircraft carriers, and the rest of the world is starting to notice. For decades, holding U.S. Treasury bonds was considered the safest investment on the planet. Safer than gold, even, because the U.S. always paid its debts and the dollar was the global reserve currency. But what happens when that assumption starts to crack? What happens when countries look at that 36 trillion number and think, maybe we should diversify? They buy gold. Not because gold pays interest. It doesn't. Not because gold is useful. It mostly just sits there. They buy it because it's the only asset that doesn't depend on someone else's promise. A treasury bond is a promise that the U.S. will pay you back. A share of stock is a promise that a company will create value. Even a dollar bill is a promise that the government will maintain its worth. Gold doesn't promise anything, it just exists. And in a world where promises are starting to feel expensive, that's worth something. Let's talk about what happens when a currency actually dies, not in theory, in practice. In 2008, Zimbabwe printed a $100 trillion bill. You can still buy the M on eBay for about $15. That bill couldn't buy you a loaf of bread when it was printed. Because by the time you walk to the store, the price had doubled. That's hyperinflation. It doesn't happen slowly. It happens all at once. Prices don't go up 10% a year. They go up 10% an hour, then 100%. Then it stops meaning anything because no one will accept the currency anymore. And when that happens, people revert to the oldest form of money they know. In Zimbabwe, it was gold. And US dollars, ironically. In Venezuela, same thing. In Weimar Germany in the 1920s, same thing. Every time a government prints too much money and the currency collapses, people run to gold. Not because they love gold, because it's the only thing left that holds value when trust evaporates. Now, is the US dollar going to collapse like the Zimbabwean dollar? Probably not. The US has the largest economy in the world, the strongest military, the deepest financial markets. The dollar is still the reserve currency for most of global trade. But probably not isn't the same as definitely not, and central banks don't get paid to hope for the best. They get paid to prepare for the worst. Here's where it gets weird. Gold's price doesn't actually make sense. If you look at it as a commodity, it should be worth maybe a few $100s an ounce. That's roughly what it costs to pull it out of the ground, refine it, and ship it. But it's trading at around $2,700 an ounce right now. Why? Because most of gold's value isn't based on supply and demand in the normal sense. It's based on fear. When people are scared, gold goes up. When people are confident, gold goes down. It's a sentiment thermometer disguised as a metal. And right now, the thermometer is running hot. But here's the part that should make you pause. Gold doesn't actually do anything. It doesn't grow. It doesn't produce cash flow. It doesn't pay dividends. You can't live in it or eat it or burn it for fuel. Warren Buffett once said that if you took all the gold in the world and melted it into a cube, it would just sit there. You could fondle it, but it wouldn't respond. He's right, but he's also missing the point. Gold's value isn't in what it does. It's in what it represents. It represents the belief that no matter how bad things get, this one thing will still be worth something to someone, somewhere. And that belief, irrational as it might seem, has survived every empire, every war, every financial crisis in human history, which means betting against it is betting against 6,000 years of human behavior. Good luck with that. So what does this all mean for you? Should you buy gold? I don't know. I'm not your financial advisor, but I can tell you what the smart money is doing. Central banks are buying. Billionaires are buying. Countries that don't trust the U.S. are buying. And they're not doing it because they think gold is going to make them rich. They're doing it because they think everything else might make them poor. There's a difference. If you own gold and the economy keeps humming along, you'll probably underperform the stock market. Gold doesn't grow at 7% a year. It barely keeps up with inflation most of the time. But if something breaks, if the BT spiral gets out of control, if confidence in the dollar cracks, if we end up in a world where the financial system needs to be rebuilt from scratch, you'll be holding the one thing everyone agrees still counts. That's the trade-off. You're not buying gold to get rich. You're buying it so you don't get wiped out. Here's the part nobody wants to say out loud. The global financial system is an experiment. We've only been off the gold standard for 54 years. That's nothing in historical terms. We're still in the early innings of figuring out whether a purely fiat currency system can work long term. So far, it's been fine, but fine isn't forever. And the people whose job it is to think about forever, the central bankers, the treasury officials, the heads of state, they're quietly hedging their bets. They're not panicking, but they're not confident either. And that's the signal, not what they say in press conferences, not what they tweet or publish in reports, what they buy when no one's looking, and what they're buying. Gold. There's a reason that vault in Manhattan is built the way it is. 5 stories underground, solid bedrock, steel-reinforced walls, armed guards, no windows. It's not built to store something valuable. It's built to store the thing we fall back on when value itself becomes uncertain. And the fact that it's still there, still full, still growing, 54 years after we supposedly moved past the need for it, tells you everything you need to know. We didn't move past it. We just pretended we did. And now, slowly, quietly, we're remembering why it mattered in the RST place. The question isn't whether gold is a good investment. The question is, what do the people in charge know that they're not telling us? And if you figure that out, let me know. 'Cause I'd love to hear the answer.